Coming up in this episode, the market cheered a lower CPI reading, but is inflation really improving? BlackRock's Panama Canal deal has China outraged, but why, if they never controlled the ports? Gold just hit 3,000, signaling trouble for fiat currencies, while Intel's new CEO gives the stock a much needed boost. Plus, in our educational segment, we break down how to understand currency pairs like a pro. Stay tuned. Hi, everyone. I'm Gary Brode from Deep Knowledge Investing. We work with hedge funds, family offices, registered investment advisors, and individuals like you to help you get better returns in the stock market. I'm here with our host, Rob Farian. He's the CEO and founder of Flying V, our digital marketing partner. Rob, how was your week?
Gary, last week was great. Had a weekend actually in Las Vegas for a good friend's bachelor party. So made it back in one piece. So that means successful Vegas trip. Everybody did. So that was really, really good. But yeah, really excited to jump back into the five things. Lots going on, lots to talk about. But yeah, I'm doing well. How about you? What's new?
All good. A question for you, because I've been investing in casinos for about 15 years now, a decade and a half in the industry. Where did you guys stay?
Yeah, so we were in downtown area, or I guess Old Town Vegas at the Circa kind of Golden Nugget area. So we actually didn't even make it to the Strip. So it was a great experience. Had a lot of fun. I was just long for the ride. But yeah, I haven't looked at LVS actually. Maybe I think I hit one or two of their casinos, and if the stock's down, then that's probably why. Because I actually did end up a winner this weekend, which was good.
Well, so for clarity, a couple of years ago, Las Vegas Sands sold the Las Vegas Venetian, for a gigantic price, for billions of dollars. So they do not own anything in Las Vegas anymore, despite the name Las Vegas Sands. But it sounds like the place you were staying, they gave you wooden nickels to put in the slot machines.
Yeah, I think in certain instances, your dollar definitely goes quite a bit further, and let's just consider Las Vegas fans Sands quite lucky then, because yeah, I had a quite a weekend at the table, so it was fun.
Good for you.
Gary, this week we're talking the sort of, in parentheses, disinflation issue. Obviously, we've talked about disinflation quite a bit on this show and just with DKI over the past couple of years. Really excited to jump into things today. We're talking CPI, BlackRock makes an appearance, gold, Intel, and then we're getting into, obviously, our investor education for our fifth and final thing. Gary, any final words before we jump right into it?
No, let's dive in.
All right. Gary, thing number one, we're talking February CPI number came in lower than expected. You're saying that you think the markets are misinterpreting what's going on here and what's happening. Thing number one, February CPI is below expectations.
All right, let's go to the statistics first. So CPI stands for Consumer Price Index. That is the index that people typically refer to when they talk about inflation. When people say, inflation is running at 3% or 2%, 4%, whatever it is, they're usually talking about the CPI. So we just got the February CPI, and it showed an overall increase of 2.8% year over year and 0.2% for the month. That 0.2% annualizes to 2.4%. So, the monthly number, 2.4%, the yearly, 2.8%. That was below last month's 3.0% and was also 0.1% below expectations. The core CPI, which excludes food and energy, because, Rob, nobody, like people, they don't buy food and energy, right? Why not exclude it? That metric was up 3.1% versus last year, up 0.2% from last month. Those were both 0.1% below expectations and 0.2% below the prior month. Wall Street celebrated the end of inflation. They got really excited. I'm not so sure that's all reasonable.
Gary, jumping on that final point, yeah, we did see celebration from Wall Street, end of inflation. Why is that not reasonable, or is it reasonable?
Look, let's make 2 points here. First of all, there's a ton of optimism, or there was, about a CPI number that was 0.2% below last month and 0.1% below expectations. Okay, so it was better than last month, better than what they expected. But just 4 weeks ago, the market tanked and was worried by a higher than expected 3.0% CPI with a 0.5% monthly increase that annualizes to 6.2%. My point on this is it's really hard to come up with one inflation number for an economy as large as the United States. And it's definitely not something that anybody can do to 0.1% accuracy. At this point, the market has been reacting, or rather overreacting, to very small changes in general statistics. Like, really think about it. If 3.0%, 3% was a disaster that caused the market to go down, and now everybody's thinking, oh, great, 2.8%, we're terrific. I got news for you, Rob. That 0.1% difference, like that 3% number could have easily been 2.9, the 2.8% could have been 2.9. The truth is we've made very little progress on inflation in the last year. And the thing that I would be potentially concerned about right now, and this is something we've been talking about a lot, is cuts to government spending will throw the country into a temporary recession. Washington, D.C. has been creating the GDP numbers out of thin air with wasteful spending that adds no economic value, but it does add to GDP. This is what I referred to as a Potemkin economy. So for people who, don't have a long history in economic history, that refers to an old trick at the Soviet Union where they wanted people to see they had all these wonderful towns. And so what they did was they built a fake town, like a movie set, and they would just move it day after day. And the officials would go past it and say, oh, wow, it looks like you have a really nice town there. But if you looked behind it, it wasn't real. It looks good, but it isn't real. And so that's what Washington has been doing with the GDP numbers. They're throwing tons of wasteful stimulus at it and saying, look, we have growth, but it's not real growth. It's just wasteful spending, and they're pretending it's production. So with prices still continuing to rise, stagflation for a couple of quarters is a possibility. We could end up with lower inflation if we have reduced wasteful government stimulus. And that's what Doge is going for. Higher unemployment in government, which has been the fastest growing sector for employment, really the only growing sector for employment, that and healthcare, is starting to show up. It's going to start showing up in the employment report soon. We're looking at hundreds of thousands of people who are going to be out of work. That's okay. It's not necessarily productive work, but it will weigh on the numbers. And, my final point on all of this is if you think the economy depends on counting theft, waste, money laundering, graft as production, then you'd be against these coming cuts. Obviously, I'm for them.
Great stuff there, Gary. Moving to thing number 2, we're talking Panama Canal and what's going on down there. You've got names like BlackRock. China doesn't seem to be too happy with what's going on in the area. Gary, thing number 2, BlackRock acquires Panama Canal ports. Tell us what China thinks about this, Gary.
Well, let's go to the basics again first. So President Trump, as he was taking office, was talking about the United States taking control of the Panama Canal back. Now, believe it or not, that actually is something that was part of the treaty. President Carter made a very unwise decision to give the Panama Canal, which the United States paid for and built, to Panama. And it's very easy to say, well, wait a minute, whether that was a good deal or a bad deal, that's the deal that was made. But there were provisions in the deal that said if the United States ends up in an insecure position as a result of this, we can take it back. And so when President Trump was talking about taking the canal back, I don't think that's practical. I don't think we're going to do it. I think we'd be fighting a miles-long guerrilla war through the jungle. It's not going to happen. But he was genuinely concerned about Chinese control of the canal. We've had 2 events in the past few weeks. One is Panama started charging the United States Navy and other U.S. military ships a whole lot less, which was a good idea. And then a week ago, a group of investors, including BlackRock, struck a deal with a Hong Kong conglomerate called CK Hutchinson. And that led to the 90% acquisition of CK Hutchinson's stake in ports around the globe, which included the 2 ports on either side of the Panama Canal. This was intended to, and I believe it addressed President Trump's concerns about China's Belt and Road Initiative. Chinese ownership of ports has raised concern over misconduct, and some people believe that China can leverage internal sources to gather data on U.S. products, potentially block future U.S. access. So with ownership of these 2 ports changing hands, the U.S. has access to high demand Panama Canal Railway, uh, capable of transporting containers at a cheaper price. I believe that this addresses President Trump's concerns.
Yeah, you mentioned that earlier, Gary. So with it addressing his concerns, yeah, what did the response look like from China, or what do you expect their response to be like?
So China was hilariously infuriated. They previously had claimed they didn't have control over the ports, but immediately characterized the deal, ready for this, as spineless groveling and a betrayal of the Chinese people, leaving me wondering, how is it that the sale of assets that China claims it didn't control represents a betrayal of the Chinese people? And to use their own language, which I think is important. I think it's important to speak to people in their own language. We strongly suggest that the Chinese government abandon their wrong thought in this matter and suggest that they should apologize for interfering in the affairs of other countries. That's the language they use whenever the United States is involved in something related to other countries. They constantly criticize us for wrong thought and wrong action, not realizing that speaking that way to Americans or to an American president is not going to be persuasive. They're entitled to their opinion, but our view is they should address their own wrong thought and apologize themselves.
You're watching this week's version of the Five Things. We're calling it the sort of disinflation issue. Be sure to head to deepknowledgeinvesting.com, sign up for a free email subscription. All you need is name, first name, email address. You'll get notified of all new content and posts on the website. We'd love if you could consider a premium subscription, $100 a month. That'll get you access to all content and material, no paywall, no gates, as well as current recommendations and what moves Gary's making in the market, as well as a bunch of other features. Also, please be sure to subscribe to our YouTube channel. Give us a thumbs up, thumbs down. Tell Gary why you disagree with him or how he's completely wrong about absolutely everything. We'd love that discourse. Well, maybe me more so than Gary.
Yeah.
But Gary, moving forward to thing number 3, we're talking about gold now. Gold breaks the $3,000 mark for the first time. You say we could say this another way: the dollar is declining. Thing number 3, Gary, gold breaks $3,000 for the first time. Tell us more.
So, Rob, I always love when you tell people, hey, there are benefits to subscribing. For those of you who are on the fence, DKI started buying gold in 2000. Sorry, I've got 2000 in the written version. It was actually 2020. Mea culpa on the typo to anybody who saw this. But over the last 5 years, since we've owned gold, the dollar price of gold has almost doubled. That would pay for your subscription over that time. So it's had an incredible run for a typically sleepy asset that often goes decades without doing anything. It's doubled, almost doubled in the time that we've owned it in just 5 years. That's the kind of thing that, you can get rich on and avoid being poor. You have returns like that. Gold almost hit $2,000 in 2011, then declined and didn't reach its prior high until late 2019. And so, the price of gold in dollars has almost doubled since 2020, also since 2022. It went up and then came down. Economists keep claiming that tariffs would strengthen the dollar, which should lead to a lower gold price, but obviously something different is happening here.
Gary, with that point, the economist talking about tariffs strengthening the dollar. What exactly is happening here? Because it seems like that might not necessarily be the case.
So, Rob, I think we have two things going on. One is, despite the left going crazy about potential cuts by Doge and cutting wasteful government spending, the truth is we just saw a deal in Washington for a $7 trillion budget where they cut a total of $7 billion. So they cut $7 billion on a budget that was $7,000 billion. This is a fraction of 1%. So what we still have is trillions of dollars of debt-fueled wasteful spending that increases the money supply. And so that's why we still have inflation. And people keep saying, well, but we have disinflation. Inflation has come down. But the truth is, these losses compound. And even a 3% inflation rate will take a massive portion of your wealth. over a 10, 20, 30, 40-year period. And, people invest over the long haul like that. So that's part of what's happening. The other issue, and this is something we've talked about as well, former Treasury Secretary Janet Yellen left current Treasury Secretary Bessent in a terrible situation. She shortened the duration on the bond portfolio, what the U.S. uses to borrow, and Bessent now has to refinance $7 trillion in the next 12 months. That's on our total $37 trillion of on-balance sheet debt. That's a gigantic number that has to be refinanced in the next 12 months. So this is something we talked about a week or two ago. The Trump administration has been taking action to reduce the yield on the 10-year Treasury, which is weakening the dollar against other currencies. A weaker dollar means higher dollar prices for gold. So I get that this can be confusing. There are a lot of moving parts, but we're just trying to simplify it. Basically, if the Treasury has to issue a lot of debt, you need to reduce the yield on that debt. If you get paid less to hold dollars, then you would pay less for dollars. A declining dollar price, a declining dollar value means a higher dollar price for gold. It really is just one thing leads to another. And that's where we are. The final point I'd add on this is more countries like China and India want less exposure to the dollar, and they've been buying and taking delivery of huge quantities of physical gold. We believe this trend will continue. But, for those of you who are pro gold, anti gold, feel free to put it in the comments. What do you think? Is this gold run going to continue? Are we going to be heading toward 4,000, or do you think gold will come back to the 2,500 level? Let us know what you think. Put it in the comments.
Yeah, please do. Always a polarizing topic, one way or the other, and love any sort of discourse questions that you might have. Again, this week's version of the 5 things, and also head to the website deepknowledgeinvesting.com, and you can ask Gary questions with our Ask Gary feature. Anything that you might have around points being made on the show, content he's writing about online, please feel free to use that feature on the website. Moving on, Gary, we're talking about Intel. They announced a new CEO recently. We know they've been having issues with their i7, i9 processors. You stay on top of that better than anybody, Gary. But we did see a stock rally with this new announcement. Thing number 4, Intel hires an experienced CEO. The stock rallies. Tell us more.
So you're right, Rob. Intel, for its last 2 years, has had issues with its i7 and i9 processors. For people who aren't so familiar, those are Intel's high-end consumer CPUs. That's not, what you're getting in the high-end servers. But if you want to buy a really good PC or a really good laptop, and you want Intel instead of AMD or one of the new Qualcomm ones, which I think could be good eventually, but aren't fully compatible with everything yet. Or obviously there's Apple. But if you want Intel, which is still, I think, your best bet for business use in a PC or a laptop, the i7 and i9 processors are their best, highest end ones. The last 2 years, they've had horrible problems with the chips taking too much current, and they've burnt out the processors, and consumers had to fight with Intel um, to get reimbursement for it or to get replacements. Intel put a patch out, which people needed to have a certain amount of technical expertise to use. But the worst thing was, in order to handle or solve the power draw problem, um, basically what Intel did was they reduced the current that the chip could draw, and that reduced performance. So people were paying for high-end processors, but getting performance that was less than that. All of this led to big problems. Intel lost share in both the PC market and the server market to AMD, and the stock is just absolutely cratered. At this point, last week, they appointed Lip-Bu Tan as the new CEO. He's a seasoned semiconductor industry executive. He served as the CEO of Cadence Design Systems for 12 years. He sat on the board of Walden International, a VC firm. And that decision sparked a stock rally. Intel stock rose from, a little more than $20 to almost $24. And the hope is that they picked the right guy. He's got what it takes to steer the company in the right direction. Worth noting, he led Cadence Design Systems to a stock increase of more than 3,000%. So Intel's been struggling lately, but the hope is that they found the right guy to turn the ship around.
With him coming on board, Gary, I mean, what is that path forward for Intel? What does that look like to make their investors satisfied with the return and just the business in general?
Well, so Rob, one of the big problems that Intel has had is they have fallen behind in terms of the manufacturing. So the rest of the industry is really bifurcated. You've got companies like AMD and NVIDIA that design their chips, but they outsource the production of those chips to Taiwan Semiconductor, which makes most of those in Taiwan, although they are going to be building here. They actually have started building here in the US fab plants. Um, Intel is one of the rare companies that both designs and manufactures its own semiconductors. And the issue with that is they have talked for years and years and years about getting to the same levels that Taiwan Semiconductor has been at, and they've just struggled doing it. And so they're making their silicon on they don't have the same small nanometer production that Taiwan Semi has. And so there's talk that there could be a potential partnership that Taiwan Semiconductor could basically buy the fab plants, do Intel's manufacturing, do a joint venture where they handle the manufacturing and Intel would just be a design company. That's one possibility. We're going to have to see, but there's talk about Intel going from being a design and fabrication company to just being a design company. And their designs are still pretty amazing. Like, when their chips are working, they really are the best option for business use. If you are a gamer, if you're buying a PC to play high end games, then you probably are already on the AMD processors. The other thing is, what I'm reading is that Intel has addressed a lot of its design failures with its new Core Ultra line. And the reason for that is the Core Ultra line is designed to compete with AMD's more power efficient chips and also Qualcomm's ARM processors. And if you think about it, we're used to having like laptops that have like a 5 hour life, a 6 hour life, but our cell phones, we're used to getting 20 hours from them or 25 hours. The deal is the Core Ultra line has a built-in GPU, CPU, and NPU. It stands for neural processing unit, basically to handle AI kinds of things, handle some of the image processing or like blurring backgrounds on Zoom calls, that kind of stuff. All of those kinds of things on the new Core Ultra line have a very low power draw. And so what it's leading to is smaller batteries, meaning your laptop may be half a pound or a pound lighter. It's leading to longer battery use. So, your laptop, if it's on a Core Ultra line, may claim 18 to 25 hours of use before you have to charge it. And because there's a lower power draw, those chips aren't burning out. So, I'm hopeful. I think Intel is a really important company for the United States. I think it's important that we have semiconductor design and manufacturing here. It is a national security issue. It's the reason the Biden administration threw $40 billion at the CHIPS Act and to encourage companies to build fabrication plants here. And it's the reason the Trump administration has been working very hard and successfully, right? We talked about this a week ago, between Apple and Taiwan Semiconductor. In the last month, we've seen $600 billion, more than $500 billion of intended investment here in the US. So I think it's important. We're hoping Intel gets this turned around. But as of now, the manufacturing capacity lags the best in the industry. And hopefully the new CEO gets that changed.
Awesome, Gary. Thanks for painting that picture. We're coming down the home stretch here in this week's version of the five things. Again, head to our website, deepknowledgeinvesting.com. Take a look at membership options, use the Ask Gary feature, or if anything, we'd love if you could subscribe or share this video content material. Thumbs up, thumbs down. Tell us what you like, what you don't like, and what we could talk about on future shows. Moving to our fifth segment, we do an investor education segment, talking about all sorts of different components of investing, what to know, getting advice on how to start career, or just understanding what certain terms means. Gary, today we're talking about understanding currencies, how to read them, spot, pegged, floating. Thing number five, Gary, how to read currencies. What I want to start is tell us, what do you mean by reading currency prices?
So that can be really confusing. Um, and often different terms and numbers get thrown around, making things even more confusing. In some currency pairs, they're typically quoted with the dollar as the base currency. Other times it's the reference currency. And so we end up in this weird situation where, like, for example, um, when we see the Japanese yen going from 140 to 150, is that higher? Is that lower? What does that mean? And that actually means the Japanese yen is weakening against the dollar. But in other situations, when the number goes up, it would mean that currency is strengthening. So the way these things are quoted is often confusing for people. And sometimes the language used around these things is not designed to be, you kind of need to know what they're talking about as opposed to being properly descriptive.
And then, Gary, there's some of these terms and go through a couple. But the first one I want to talk about is the spot price. What's the spot price when it comes to currency?
Yeah, so that's just a fancy finance way of saying it's the real time market price of a currency. So, think about it this way. If you want to go into the stock market and buy shares of Nvidia or shares of Tesla, whatever the current price is, that would be the spot price. It's not a futures price. It's not an options price. It's not the price down the road or for some sort of swap contract. The spot price is just the price as it is right now. To even further simplify it, let's imagine, Rob, we got on a plane and we went to, Japan, and let's take a quick look right now. Um, and so right now, the exchange rate is 149 spot 17. So if we flew to Japan right now, and we, got to the airport, we handed them $1, they would give us 149 yen. Now, yeah, there's going to be, they'll want a fee, and, there'll be some slippage on, because the currency changer will want to take some money as well themselves. But that's the way to think about the spot price would be if you went to that country, what would you get for your dollar?
Next one I want to shift to, Gary, is pegged currency. So I know we have something to do with price stability here, but what can you tell us about pegged currency and how you look at it?
So some currencies float, but a pegged currency, they are typically pegged to the value of another currency, often the US dollar, meaning their price remains stable rather than fluctuating due to economic factors. It reduces volatility, it increases price stability. So, like, just to give you an example, the US dollar versus the Belize dollar is fixed at two Belize dollars to the US dollar. So if we go to Belize today and we give them $1, they will give us two Belize dollars. If we go tomorrow, they will give us two Belize dollars. If we had gone a year ago, they would give us two Belize dollars. So that is fixed. Now, there's also a hybrid situation where sometimes countries will let their currencies float within a range. China did that for a long time. Their yuan price, they'd be between 6 and 7. And if it was, if they started to drop below 6, they would um, reduce the value of their currency. If it started to go, actually, I said that the wrong way. Yeah, no, that was right. Like I said, it can be confusing. Above 7, they'd start to strengthen the currency, right? See, it really can be confusing. But they'll sometimes there's a range. So that would be a hybrid situation.
Gary, you mentioned too float currency, and the last term I have here is floating currency. I know there's fluctuations involved, but how can I wrap my head around that if I was a beginner, intermediate investor on what floating currency actually is?
So floating currency is the most common situation. And all that means is that the market will set the difference in the price between different currencies. So that's what we've seen in Japan just a few years ago. you would receive 102 yen to the dollar. Now, since then, the yen has weakened substantially and the dollar has strengthened, largely because the Bank of Japan has kept their interest rates insanely low. They're starting to come up now. And the US Federal Reserve hiked rates much more aggressively than other central banks. Now, in my opinion, they didn't hike aggressively enough, but that's been the subject of a lot of debate. That caused the value of the yen to plummet from 102 to the dollar to at one point it crossed over 160 to the dollar, and right now it's around 150. So what that means is that the value of the Japanese yen versus the dollar has fallen by about 50% in the last few years. So these prices can float, and there are dangers on either side of it. So for instance, if you let your currency float, you run the risk that the international markets will change, and all of a sudden, if your currency gets too strong, your exports won't be competitive. If your currency gets too weak, imports will become expensive. Now, you don't want either of those things to happen, but at some point you gotta pick one, right? You can't have both. The important thing to know is that there are dangers with fixed exchange ratios as well. So those will offer stability for economies reliant on trade. But the key thing to remember is that in order to maintain a practical fixed exchange rate, the country trying to keep the peg, in the case we gave, Belize, they need to be careful not to issue too much currency. And it's also a reminder they won't have the ability to control their own interest rates. So basically, what I'm telling you is whether you're fixed, whether you're floating, whether your currency is strengthening or weakening, there are benefits and risks either way. And I guess the conclusion we can draw is even in the sovereign currency market, there's no such thing as a free lunch. You kind of need to pick your path, and there are benefits and risks no matter what path you choose. Hopefully, this helps. But it's really important to note that currencies and discussions about currencies can be very confusing. There are a lot of moving parts. These things are often quoted in ways that are not intuitive. So, what I'm hoping is that this explanation was helpful to you, the audience. But if it wasn't, if you have questions, if some of it was confusing, if some of it doesn't make sense, either put a question in the comments or use the Ask Gary feature on the website. This is one of these things that we may need to cover multiple times to make it clear to people.
Great stuff, Gary, and appreciate you breaking that down for us. And again, any questions that you might have, please reach out to us. It's a huge piece of what DKI provides. It's just general knowledge across the board, deep dives as well. Gary hits the investing angles from every direction and as shallow or as deep as we need to go, based on the competency of the individual investor. That concludes this week's version of the 5 things, the sort of Disinflation issue. We'll be here, same place, same time next week. Gary, I forgot to mention, and I would virtually pinch you, but you're not wearing green, and it is St. Patrick's Day. So please note that. If anything, give Gary a thumbs down in the comments for that one.
Right. There should be a penalty for such insolence.
Yeah, exactly. So, but yeah, Garrett, great stuff as always. Check us out at the website deepknowledgeinvesting.com, Instagram, LinkedIn. Gary's active on X as well. You can really find us anywhere, or just reach out via the website as well. Would love to talk and network with everybody that's listening. Gary, I'll turn it over to you for the final closing thoughts.
Round of applause this week again for DKI interns. Josh Reeves and Cashin Crow from the University of Tennessee did a great job. A lot of the work and research that you guys are seeing on the 5 things is done by those 2 young men. Their knowledge of finance and economics is really terrific, far more advanced than where I was at their age. So good for them. And round of applause for the University of Tennessee for preparing these kids so well. Rob, also want to thank you. I love doing this show with you every week. It's our time to hang out together. I always appreciate it. For everyone who's watching this, if you're looking for good marketing people or you have marketing people, just ask yourself if your marketing people do this with you every week. If the answer is no, reach out. We'll put you in touch with Rob. Also, round of applause for Flying V employee Nazim Abbas. Nazim has been, tweaking all kinds of things with the 5 things and our video presentation and the keywords and doing all kinds of things to help us get a little more traction with the YouTube algorithm. Really amazing work. He makes this so much easier for me. It's work that, that's not my expertise, right? I'm trying to make money in the market, but he understands the SEO side of it. And so, that's terrific work. And then, the final thing on this, we saw some really nice subscriber growth this week. I think a lot of that was because Marty Bent was kind enough to invite me on his podcast. That video is available, but we had the chance to talk about macro and Bitcoin and the dollar and some of the things that the Trump administration is doing that's affecting both the equity markets and the bond markets and the value of the dollar. And, Marty just has a huge audience. He's terrific to talk to. He's somebody I really respect and admire. So thank you to him. Finally, to all of you watching this, thank you so much. We know your time is valuable. We appreciate you spending it with us. If you want to like and subscribe, terrific. But if you don't, hey, I'm not the boss. You do whatever you want. But thank you for watching this. We're glad to have you. We will look forward to seeing you with a new version of the 5 things next week.
Thanks, everybody.